Amazon versus Tesla. Before we start, I would want you to hit that red subscribe button so that you never miss out on any of our videos. Almost 20 years ago, Amazon was mocked in a famous story for being overpriced and useless and whatnot. And today, it is one of the most successful and recognized companies in the world. Amazon's market value at that time of the story was $19 billion, and today, Amazon is worth $1.5 trillion as a company. However, this cover story captures the quintessential utility of investors' skepticism when evaluating a growth stock. There were many growth stocks in 1999 with greater than $19 billion market capital that was out of business a year later. And today, we know what Amazon is, absolutely not an overpriced or useless idea. Amazon has recognized its losses by balancing it with big gains in current years. Interestingly, the investors have started pricing in how challenging it will be for any possible competitor to reach their level soon. If we better understood what the critics missed about Amazon in 1999, maybe we could better discover whether one of the most popular growth stocks of today, Tesla, will also be a trillion-dollar company in the coming years. Currently, it is $830 billion. Just because there are lots of potential competitors doesn't mean those competitors will be successful. The renowned article lists the many possible competitors that could have replaced Amazon. However, the list almost seems comical now. There are always lots of possible opponents for thriving companies. The big names have deep pockets, but generally do not focus on some new niche. The startups have lots of focus, but not always the momentum or resources to catch up with a successful first mover like Amazon. On this point, Tesla bulls can feel good that Tesla's 10-year head start gives it a big advantage over the established car companies on coming out with Model 3 competitors, which appears to be 4 years away from shipping a car. So while there are some similarities between Tesla and Amazon's early days in terms of being a first mover going after a large potential market, there are also some big differences. The biggest difference seems to be that Amazon has almost always been able to generate operating cash flow from its operations. In contrast, Tesla rarely has been able to, and just embarked on a series of ambitious plans that have burned and will continue to burn an enormous amount of cash over the next 18 months. Tesla crossed the $300 billion milestone in 2020, while performing less than half of what Amazon was making at the same point in time. Tesla's stock rose by 200% in 2020, and stronger than expected Q2 deliveries further kindled the wave ahead of Wednesday's earning report. Possible reasons for its soaring estimate since the beginning of this year have been closely observed and reviewed by Wall Street analysts, day traders, and investors. CEO Elon Musk even tweeted back in May that he considered Tesla's stock price was a bit too high, which hurled the stock acrobatics, but in recent weeks the stock has been climbing. According to the analysts, kicking this breakthrough while producing far less revenue than Amazon when the tech titans reached the same market cap is reflective of a great cost premium for Tesla. Moreover, an extension of the S&P 500 market assists in demonstrating some of Tesla's valuation premium. The analyst said that they assume that the American electric vehicle and alternative energy business are collecting greater levels of interest from investors because of its illustrated and perceived technological dominance, contrasted with competition in the international transportation market. That's all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so that you never miss any amazing video from us.